All right, U.S. banks trading higher today. This as we await stress test results for the U.S. banks. Those are coming out in about a couple hours from now. The big question is whether or not the U.S. banks can withstand a downturn in Europe. Can the European banks, for that matter, withstand it? The thinking, of course, is if the U.K. goes into recession, there's going to be a whole drying up of capital. The banks are already sitting on some paper that just isn't so good. And look, that could create lots and lots of problems. We've seen that movie before, back in '08. So what happens next? Here's some insight. Dick Bove. Dick, good to see you.
Thank you, Trish.
All right, so you aren't quite as pessimistic as that. I mean, that's the scenario, and I'm outlining it for the viewer because there are people out there that are worried about that. But can you put our fears at ease?
Well, let's think about this. In the last 5 years, the American banks have picked up $3.3 trillion in new deposits. They took $2 trillion of that, and they put the bulk of it into U.S. Treasuries and the remainder as cash at the Federal Reserve. And then they took $1.3 trillion and they bought loans with that. The fact that they put $2 trillion in treasuries and in cash deposits at the Fed tells you two things. Number one, it means that the balance sheets of these companies are in the strongest shape that they've been in literally 45 years. And if you bring capital into the picture, in 50 years. The other thing is, if you're worried about a run on the banks, there's $2.7 trillion, $2.4 trillion now at the Fed, which is bank money. So, in other words, if there were to be a run on American banks, they can grab $2.4 trillion virtually instantaneously and put it into the marketplace to handle, to handle the run. Then, of course, you've got the stress tests. You've had 5 of them. And, literally, there's like 10,000 to 20,000 people that work, for 6 months to come up with the data to provide to the Fed for the stress tests. And what did they show last Thursday? It showed that the 33 largest banks in the United States can withstand a hit bigger than the Depression of the 1930s and still have money to lend. So, no, I'm not worried at all.
You're not worried about U.S. banks. Are you worried about European banks, Dick?
Well, I don't follow them, but, I would have to say you have to be worried because basically, and this is not good analysis on my part, but basically that these companies haven't had enough capital to write off their bad loans for roughly 6 or 7 years. So the bad loans are still sitting there, and the capital that they have is not real capital, and it has to be replaced with new injections of funding. So, yeah, that creates a problem. So the question is, if Barclays were to go, if Deutsche Bank were to go, is that going to take down J.P. Morgan or Citigroup? Yeah. And the answer to that is that, we have established new accounting rules so that the counterparty risk that you have in the American banks is now on their balance sheets. Good. In addition to which, there's major capital up against that counterparty risk, both of which didn't exist in 2008.
Good. Okay, bottom line, Dick Bove says we're safe here in the U.S., though the Europeans, they may want to watch out. Dick, it is good to see you. It's been a while.
Well, thank you.